Mr. Speaker, I rise in support of my legislation, the Climate Risk Disclosure Act, H.R. 1187. I'd like us all to imagine for a moment that you had all of your wealth tied up in a single company and you knew that that company was on track to lose nearly 20% of their value thanks to a known and avoidable threat. You called the CEO and the CEO responded by saying, "We've got it taken care of, but I'm not going to explain how." That is the reality that the climate crisis is creating for our global economy. Swiss Re recently found that global GDP will reduce by 4% if we meet the Paris climate goals. If we stay on business as usual case, 18%. Domestically, the CFTC has come to roughly the same conclusion, estimating that for every 1 degree Celsius rise in temperature, we can expect a 1.2% reduction in annual GDP growth. That is material, my friends. It is a big deal. Those economic losses are due to the wildfires, droughts, blackouts, and superstorms that have already caused $500 billion of damages in the past 4 years. And investors understand this. The fossil fuel industry has spent 10 years slashing prices, and you know what? They're still losing market share to lower-cost renewables and efficiency. ExxonMobil didn't write down $20 billion because they're woke. They wrote down $20 billion because the free market is beating them. Investors want to know how to reallocate their capital in response to that risk. They want to know how to allocate it to more productive uses. That's why there were over 140 climate-related shareholder proposals at U.S. companies during the 2020 proxy season. But we in this body have not done our job to protect those investors. Let us be very clear, when we talk about investor protection, every company in the world would like to have asymmetry of information. Our job is to make sure that if you love free markets as much as I do, as much as those of us on this side of the aisle do, then you have to make sure that they have full transparency of information. Right now, public companies have no obligation to disclose their exposure to climate-related risks, nor is there a consistent format for those disclosures. This bill would fix that. It directs the SEC to issue a rule requiring every public company to disclose its direct and indirect greenhouse gas emissions, the total amount of fossil fuel-related assets it owns or manages, how its valuation would be affected if climate change continues at its current pace, or if policymakers successfully restrict greenhouse gas emissions to meet the Paris goals, and its risk management strategies related to the physical and transitional risks of the climate crisis. I want to reassure my friend.
I yield the gentleman an additional 30 seconds.
I want to reassure my friend from Arkansas. The bill does direct the SEC to tailor those disclosure requirements to different industries to make sure that the burden is borne most heavily by those companies with the greatest contribution to that risk. When it comes to making this transition, markets are some of the most powerful tools we have. But efficient markets depend on transparent information. It is on us to provide that efficiency, to unleash the power of our entrepreneurs and our capitalists, to create jobs and economic growth, and to leave a better planet than the one we inherited. Only if we act. This is a win for capitalism, it's a win for consumers, and a win for the planet that we will pass on to our grandchildren. I urge my colleagues to vote in support of this legislation, and I yield back.